Okay, this video we are going to go back to our ratios from business. I'm going to do 2017 question 6b. I'm going to do this a little bit longer because I want to explain everything as I'm going to go through it. But then over at the end I'm going to show you how you'd answer for this specific question asked. Okay, 2017 they give you a number of pieces of information. I'm just going to explain what each of these mean first of all so that you know you can't be using ratios if you don't understand where the initial information came from. So sales, this means how much you sold, basically. So you sold 200,000, but what we're really interested in, if you sold 200,000, how much money do you actually get to keep? 200,000 was the money that you brought in from sales, but how much of that actually stayed with you as a profit? So then they give you your net profit. So look at this, your sales were 200,000, but you only actually got to keep 30,400. Now the net profit means that you've paid your expenses. So this is after expenses. Okay, so that's really important. Current assets, we've done this before with the liquidity. These are things that you own that you can turn into cash quickly. Okay, so these are things that you own. Current liabilities are things that you owe. But the thing with these is they're current, so you're going to have to pay them quite quickly. Usually you have to pay them back within, it could be a month or two, but we say things within 1 year. Issued capital, this means these are the shares that you've sold. So they're the shares that you have sold. So this particular business has sold 300,000 shares. So that means there's 300,000 people that have shares, if there's one share per shareholder, or there might be only 3 shareholders and they might have 100,000 euros worth of shares each. We don't know how that's broken down, but we do know there's been 300,000 shares sold. Long-term loan, this means that this particular company has borrowed 400,000. It has to be for a long-term purpose because when we did finance, we know when you borrow long-term, it has to be for a long-term need. And retained earnings, this is just a fancy name for the savings that has happened in a business. Okay, so first of all, in the exam question, they ask you to calculate the net profit. So the first thing that you must do in your exam, you have to write the formula. Okay, the formula is very important. So if you look here, I've said that you made 30,400. That doesn't really tell me a lot. It tells me what you have made in cash, but it doesn't tell me what kind of sales that you have in relation to that. So we need it as a percentage so we can compare it to last year or we can compare it to similar companies. So the formula is you want to know how much profit you made based on your sales. So this is 15.2%. Now what does that actually break down? It means for every €1 that you sell, after you've paid everything, all your expenses, you have 15 cents left. So if you sell something for €1, you would only have 15 cents left after you've paid all your wages, your overheads, your rent, your advertising. So 15 cents is what you will actually have left. Obviously, it's profitability. So we would always say the higher the figure is, the better. Okay. If the net profit was decreasing, a lot of times in the exam, they're going to give you these ratios as being negative because they want you to come up with a solution to the problem. So if the net profit was decreasing from 1 year to the next, you would say the trend is not good and it's worrying. Nobody wants the net profit going down. Now, how to improve your net profit? You can use any one of these 3. You don't need to talk about the 3 of them. Okay, just mention one. You know your net profit, go back up here, is based on sales. So one way of improving your net profit would be increase your sales. How does any business increase their sales? Take out an advertising campaign, decrease your selling price, do some sort of promotion. So I'm saying increase your sales. How? Reduce your selling price. Maybe what you're buying is too expensive. Maybe the cost of buying the things you're selling, they're very expensive, so maybe you need to get a new supplier. So reduce the cost of your sales, find a cheaper supplier. Or I'm saying number 3, reduce your wage bill. Maybe don't allow employees to do overtime where you'd probably have to pay them double pay. Maybe get new employees in instead, or get students into work. So these are all information that you could use in some questions. Now in this question, just as well to say to you, who would be interested in your profitability? Now, it doesn't matter which, you have 3 profitability ratios to cover here. It doesn't matter which of the 3 you're talking about. Employees are very interested if the business is profitable, because if it's profitable, it means their job is secure. It means they might be able to look for a pay rise. The investors are very interested in profitability because remember, they get their dividend. Now, looking back over here, there's 15 cents left for every euro. So then the directors have to decide this 15 cents that's left, how much of it do we keep in the business as savings, which we call retained earnings, or how much of it will we give out as a dividend. So the higher this is, the better chance these investors have of getting a dividend and a high dividend. The managers, and this goes back to your analysing your accounts as well, is the managers want to know how efficient they are. Okay, and we use this a lot in the accountancy. And in the accountancy, when we talk about profitability, we say efficient use of resources or non-efficient use of resources. So that's just a revision for the accountancy students. So the manager here, they have been given the responsibility to run the business on a day-to-day basis. Their responsibility is to get this nice and high. If they don't get it nice and high, you would say the managers haven't had a good performance. They may not get bonuses, and it might be harder for them to move jobs as well in the future. Now, this particular question, first step, you would calculate your net profit. Now, just looking at it, I just need to go back to the question. Where is it? Right, they give you the net profit from last year. So the net profit in 2015, so that's the first thing we write down. Net profit in 2015 was 20.5%. You have to state the obvious. Okay, number 2, net profit in 2016 is 15.2%. Number 3, state whether it was a decrease or an increase. This is a decrease of, take the 2 of them away there, and you get 5.3, I think. And you say that's bad. It's a bad trend. Make sure you say the trend is bad. Now, the 4th thing here, I want you to still say the company is making a profit. It is profitable, it is making a profit. So I just want you to say the company is profitable. And that's probably the one in both accountancy and business that most students actually forget to put in. Okay, so the company you're saying is profitable. Now, we don't like the trend, so we're going to have to make a recommendation. So our recommendation and you can pick one of those 3 to put in as a recommendation to improve your net profit. Okay, let's look at this again. You calculate the ratio. You compare it to last year. Make sure you always calculate the increase or decrease, and you have to state the obvious. You have to say it's bad or good. Always say the company is profitable. Once it's making 0.5%, it's still a profitable company. So put that line in. The company is profitable, but you were making a recommendation because you don't like the trend of it decreasing. So you're saying it should do one of the 3 things here. And that then will get you your full marks for your net profit percentage.